Andrew Bassat, thanks very much for talking to Business Spectator today.
Great pleasure, thank you.
It's your results today. It's the first time you're flying solo as such. You're without your brother Paul presenting results from now on. But you came in with a fairly good result. It's 104.6 is the key number, their net profit, just a tad above expectations in the market. What were the key drivers behind the results?
Look, it has been a record result, so we're very pleased. Probably the two areas that went ahead most prominently were the employment business in Australia and New Zealand had a very strong year and a clear record result, despite ad volumes being a fair way off the high still. And international grew to a substantial part of the business now, with China in particular moving from a small loss to a very solid profit.
But just looking at the numbers, employment, seek employment, that is job ads, that's still the bulk of 43% of the business roughly at this time. And you are starting to face some headwinds there. The second half was slower than the first half, is that correct?
No, the second half was better than the first half.
Mm-hmm. In terms of its volumes and in terms of the volume of jobs?
It was marginally slower, but it's been relatively slow since we merged from the GFC. What we've seen has been slow but steady growth in ad volume. So it's never done this. But it's been like this all the way, so it's been relatively similar the second half to first in terms of ad volume.
And in terms of dealing with this changing environment for ad volumes, we can see the ANZ job ads is definitely petering, it's definitely slowing down, so are the volumes. So strategically, what does Seek Employment do, that unit do to deal with that?
Look, to some extent our starting point is always to take a long-term view. So if you take a 3 to 4 year view, we actually emerge better in terms of structural shift if there's been a downturn in the middle than if there's no downturn. So to some extent we're not agnostic, but you know it's okay if you take a long-term view, just focus on the fundamentals of the business as we always have. But some costs come out. You spend less on marketing if it's easy to attract candidates in a downturn. But beyond that, we don't do much differently.
And in terms of the overall picture online, your report says something like 82% of job ads are now online. And what do you see is where will it settle, do you think?
Well, look, the better story is to have a look at the revenue. And there's more than 80% of job ads online. Probably about 80% of job seeker activity is online. And within online, we're obviously predominant. But dollars are about 50-50 online or print. So we think there's a substantial opportunity to move towards 70-80% of the dollars online rather than in print, as you've already seen happen in the US.
Is this executive positions that must still come through?
Well, it's a bunch of things. So I think there's an opportunity in these executive positions, there's an opportunity in areas like government and SME in terms of volume. There's substantial opportunities for us in yield, and there's substantial opportunities for us in terms of new product development and expanding where we play in the value chain. So there's a bunch of stuff we're doing on the ground that gives us confidence that macro story of the dollars matching the activity will happen over time.
And just briefly on the international business, if you could cover off in terms of, well, first of all, Seek Education, how it fared, and your key international units, what's happening there and how do you see them panning out?
Sure, I'll start with international. That's the simplest because we're doing the same thing in a range of other markets we're doing in Australia with a range of shareholders from sort of 20-odd% to sort of 60-odd%. In good existing businesses, 3 in Southeast Asia and China, 1 based in Hong Kong, 1 based in Malaysia, operating throughout Southeast Asia, and a 3rd in China. These businesses are in very, very high growth markets. They're number 1 or number 2 in all of their markets. They're all profitable and all growing very nicely. And we're very excited about the next 10 years of continuing to grow those businesses, hopefully moving the businesses that are number 2 into number 1 place and consolidate a number 1 position in those that are already there. We also have 2 businesses in South America, 1 based in Brazil, which is the clear number 1 in Brazil, and 1 based in Mexico, which is the clear number 1 there. And it's the same story there, just continue to grow those businesses in what are very early stage markets.
And finally, will you seek acquisition opportunity in this is a volatile time in the markets? It's a time when companies can move in and acquire. Are you on the acquisition trail?
Oh, look, over time, you know, we are likely to make more acquisitions. We've made quite a few to date. We think we've got a very good return to shareholders in the acquisitions we made, so we've been encouraged. We've got a lot on our plate right now, so I think it would need to be a good opportunity to distract us from what we're doing. But yeah, over time we will make more acquisitions, probably both internationally and in education.
Andrew Bassat, thanks very much for talking to Business Spectator.